Alright, hi everyone. Welcome to today's webinar brought to you by IC Markets, where we'll be covering the pre-market live analysis. Alright, we'll just start in a couple of minutes. Do take note, we've got the live chat going on as well, so do drop any questions and requests that you may have in this chat box, and I'll be happy to go through. I'll be happy to answer your questions. Right? Yeah, just want to make sure you guys can hear me as well. And I'll be starting the video pretty soon. Once we get to the disclaimer, I'll start the video as well. And you should be looking at my slides, IC Markets Webinar Pre-Market Live Analysis. Alright, morning Marissa, good evening Marissa, good to see you. Better, please clear sound. Alright, is this a bit better? Just let me adjust it. Is this a bit better now, Marissa? Alright, okay, yep, I think we can start the webinar soon. As usual, we'll start with the disclaimer. Hi Watson, yeah, Des is still traveling. He should be back next week for the pre-market live analysis. So next week's session will be covered by Desmond as well. He'll be returning. Uh, he'll be returning back to take over this pre-market analysis. All right, hi man. All right, okay. So as usual, before we start, do take note that this is marketing communication. It does not contain, it should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. And the analysis contained here does not constitute a personal recommendation. It does not consider your personal investment objectives, investment strategies, financial situation, or needs. Also, do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Alright. I've started the video as well. I just want to make sure you guys can see me. Just let me adjust the screen just a little bit. Alright. This is a bit better. Okay, alright, okay. So as usual, we'll start with the key events, do a quick review of what were some of the key events that took place last week and what we should look out for this week. And then, of course, we'll do the analysis on the majors and any other instruments that you may have. All right, for sure. Definitely do pound as well. Sure, Ren. All right, okay. Before all of that, yeah, sorry. So my name is Ketan Ramachandra. So here I'm an external analyst here at Everest Fortune Group, where we've been the finalists for Best FX and Best Equity Research for the following years, 2019, 2020, and 2021. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group. All right, okay. So just to start things off, we'll quickly look at some of the key events that took place last week. Basically, there were quite a few items, but the two most notable ones would be the ECB monetary policy decision that took place on Thursday, the 14th of September, as well as US CPI data and unemployment claims. Right, so these were the three main data economic news that were released last week. Right, okay. So as we all know, the ECB raised their main refinancing rate by 25 basis points, or that's a quarter of a percentage, from 4.25 to 4.5%, right? So this is the one they're looking at, the main refinancing operations. So there's three main rates in the Eurozone: the deposit facility, main refinancing operations, and the marginal lending facility. So all three rates were increased by 25 basis points, but the main ones that we're looking at is the main refinancing operation. So that now stands at 4.5%. Right. All right, good to see you too as well, Jamilu. Welcome. All right. So just to take note of, to quickly summarize what happened with regards to the statement, as well as during the press conference by ECB President Christine Lagarde. So although they raised interest rates for the 10th consecutive time on Thursday, September the 14th, they did also signal that it is likely they have likely ended their tightening cycle. So what that means was Thursday's rate increase was very likely the last one that was done by the ECB, and we can expect them to now just maintain rates moving forward, right? Although inflation is still very high in the eurozone, it does seem that the ECB is no longer going to keep raising interest rates, but instead they're just going to maintain them. So this is part of the reason why we saw the euro sell off very heavily on the 14th as well. So despite the ECB raising interest rates, their outlook and the statement and the press conference as well was relatively neutral and maybe even somewhat dovish. So that's why the euro sold off pretty significantly, and it was also because markets uh, inferred the information as this was the last hike by the ECB. All right, hi Christy, welcome. All right, then moving on. Uh, After which ECB, sorry, the ECB released their statement at 12:15 p.m. GMT time, followed by the press conference at 12:45 p.m. GMT. But in between, we also had the United States release their information data or their latest consumer inflation data for the month of August. Right, so that was at 12:30 p.m. GMT. So during this period, half an hour period or 45-minute period, it was a very volatile session 30 minutes for currency markets, right? Okay, so as we all know, inflation in the US for the month of August increased on an annualized basis, right? On an annualized basis, it increased to 3.7%. It was about 3.2% in July, 3% in June. So we've seen headline inflation starting to increase on an annualized basis. No guesses for where the largest contributor was, with crude oil prices, especially WTI oil, now breaking above $30 per barrel. The largest contributor to the monthly increase was gasoline. Right. And the other big contributor was also the shelter index, which measures housing prices and rent prices as well. So these two are the biggest components that added to the increase in CPI. So if we look at the chart, so this is the headline CPI. It currently stands at 3.7% year over year for the month of August. So in June it was 3% here. So this is June 3%, July 3.2, and now 3.7%. So now this is a all right. Hi everyone. Sorry, is this better now? Okay, managed to resolve the issue. Can you guys hear me and see my screen now? We are on the page for the BOJ interest rate, and also when did we stop off at? You guys, let me look at go back to the slides. Okay, basically we were looking at the key events coming up this week. Is it better? Yes. Okay. Thank you, Ren. All right. So uh, all right, okay. So just to quickly see when we end. All right, okay, thanks. All right, okay, apologies. Okay, so just to quickly recap, if those who have missed it, the key events coming up this week, we have four major central banks, the Federal Reserve, the Swiss National Bank, Bank of England, and the Bank of Japan releasing their respective monetary policy statements this week, and we'll also have the respective press conference as well. So do take note of these events, 20th September, 21st, and of course, the 22nd September as well. All right, so if we move on into Forex Factory, uh, just quickly take note. Okay, so I'm on GMT time, so there's a bunch of other data that's coming up as well, but the key ones would be Federal Reserve with the FOMC meeting on September 20th, 6 p.m. GMT time, where they'll release the statement, followed by Chairman Powell's press conference at 6:30 p.m. GMT. This is going to be market moving as well. Then we have the Swiss National Bank at 7:30 a.m. GMT on Thursday, 21st. Press conference is currently tentative. The time has not been fixed, but it usually is about 30 minutes to an hour after the statement is released. Then also, of course, we have the Bank of England at 11 a.m. On the same day, where they are likely to um, increase interest rates. You can see here the forecast for the Bank of England is to increase it from 5.25 to 5%. Similarly, for Swiss National Bank, they are also forecasted to increase from 1.75 to 2. but the Federal Reserve is expected to keep rates steady. They're forecasted to keep rates steady at 5.5%. And then finally, we end with the Bank of Japan. They released their monetary policy statement. Okay, it's currently tentative on the 22nd of September, but generally, the statement is released between 3 and 4 a.m. GMT time, followed by the press conference, which may be at around 4 to 5 a.m. GMT time. So do take note of the four main central bank decisions coming up this week. Right, so of course, um, with that, we will see. Let's head on to Forex Factory now. And okay, let me adjust the camera as well a little bit so we can get full view of the screen. All right, hi Mark, thank you so much. Okay, everyone, yes, apologies once again. I think there was some issue with the streaming software, but I think we've resolved everything, and now we can fully concentrate on today's analysis. All right, okay. So as we can see, I'm on the daily time frame for the dollar index, right? So since mid July, we've had now I think was it eight or more consecutive weeks of strong gains in the dollar index. So now I'm on a weekly chart, so we can see 1, 2, 3, 4, 5, 6, 7, 8, 9. So we've had 9 strong weeks of for gains in the dollar index. As you can see, last week dollar index dropping as low as 104.40 before bouncing to end the week higher, right? So if we look on the daily time frame, we can see Monday the dollar last Monday the dollar started selling off very aggressively. It pulled back towards close to the first support level and then found support on Tuesday before bouncing to end higher, right? So we had CPI data towards the end of the week, which was hotter than expected. We also had unemployment claims, which were lower than expected. Both of these factors act as bullish catalysts for the dollar index, and that was reflected in price, especially on Thursday, 14th of September. Right, so you can see how the economic data has acted as a bullish catalyst for the dollar index, right? So this first support level at 104.38, this was a level that was identified last week as well. We said that after price broke above this level here, we could see the dollar index pull back close to this level before resuming higher if inflation came in hotter than expected, which is what actually happened last week. Right, so okay, so this level at 104.38 is identified as a major was identified as a major resistance because of this significant swing that took place here, right? We saw price making a significant swing high on 31st of May. So this level was originally acting as a major um, overlap resistance or swing high resistance. When price after broke through above it, then will proceed to act as a major first support, right? So we can see this is a nice overlap support here. Price finding support on Monday and Tuesday before bouncing higher. Okay, second support is identified at 103.55. Why do we say that? Because we can see price making a pretty significant swing bounce here on the 14th of March and then making another significant swing high here on 30th of June as well as on the 6th of July. So you can see multiple instances where price has reacted off this level as a support and resistance. And this is another strong overlap support for the dollar index at 103.55. Now, what about the new resistance levels, right? So if you look at zoom out a little bit, so if you see since 1st of December, after price broke under 105.75, price has failed to break above it. We can see price making a pretty significant swing here on 7th of December, as well as another one here on the 5th of January, and then in March as well, early March. So we can see three instances where price has failed to break above this level. So that's how we've identified 105.75 as the first major resistance for the dollar index. And this also lines up pretty well with the 161% Fibonacci extension level. So how did we find this extension level? Well, we found it by using the Fibonacci retracement starting from this swing high here on the 6th of July, ending with the swing low on 17th of July. Right? So we use the 161% Fibonacci extension level to help us identify a major resistance zone, which also lines up with this pullback resistance at 105 $1.75. Now, with regards to the second resistance, if we zoom out a little bit and we go back to look in September of 2022, price made another significant swing bounce here on 13th of September before making new highs. So you can see this is a significant swing here, swing bounce here, and we also, after price broke through or broke under this level at on 11th of November, we see price making another significant swing high here on the 21st of November. So this is also now indicates to us a very strong overlap resistance for the dollar index, which is at 107.75. All right, so these do take note. These are the key levels for the dollar index on the daily time frame. We've got four major central bank meetings coming up with the Federal Reserve concluding its FOMC meeting on the 20th of September. So we can definitely expect uh, higher volatility for the dollar index. Do take note the press conference will probably be the most important aspect of the whole FOMC meeting, right? Because it's widely expected the Federal Reserve will keep rates steady at 5.5%. The statement also could be relatively neutral, but it'll be the press conference when Chairman Jerome Powell will be giving his direct insights to the media. So this could be, even though they may keep rates on hold at 5%, Federal Reserve Chairman Powell could still be very hawkish during the press conference. So do take note, he could still be very hawkish during the press conference, and that could create demand for the US dollar and thus drive up dollar index as well. So we may see uh, the dollar index stay above 105 for the initial part of the week, right? Or maybe pull back towards 105 as well. But then during the press conference, if Chairman Powell does turn out to be hawkish, we may see the dollar index resume its uptrend again. And do take note, the dollar index has been rising strongly over the last 9 weeks, so that's almost just 2 months now, right? Coming to 2 months, and we may see price consolidate or pull back to remain above 105 initially for the initial part of the week. And if Chairman Powell is hawkish during his press conference, we are likely to see the resumption of the uptrend for the dollar index continue. All right, so naturally, if so the dollar index has been rising over the last 9 weeks, then that would mean, of course, the euro has been falling, which we can clearly see here, right? Okay, so let's just zoom in a little bit, and we can see that price has been trading in a bearish channel since 18th of July, right? So we can see price making lower highs and lower lows, and broke through a significant overlap level last week at one, which was at 1.0693. So this, what was previously a significant overlap level, overlap support level, now becomes a significant overlap resistance level, right? So we can see price making a swing high here, significant swing high on 14th December, uh, right at the end of December as well. And after price broke above it, it found support here in mid-Feb, then breaking through it, finding resistance again in early March, and you can clearly see the significant swings or the levels where price has reacted off 1.0693 several times. So this is how the first support was originally identified, which now is going to act as the first resistance. Now going up a bit further, second resistance is for the euro is going to be at 1.0846. Why do we choose this level? You can see actually price making a significant swing bounce here three times. Once on 23rd of June, then again on the 30th of June, then on 6th July where it made a very strong swing bounce here, right? So that's how we've identified the second resistance. Let's see. Okay, in order to let's see, we can also probably do a Fibonacci retracement. I'm going to start with this swing high here on the 18th of July, ending with the swing low here on 14th of September. Let's see if there are any Fibonacci levels that line up with the overlap resistance levels that we've identified. Okay, the one closest would be 38. That's pretty a little bit close to where the second resistance has been identified. So let's just keep 38%. So we also have the 38.2% Fibonacci retracement level, which lines up a little, okay, not lining up exactly with where the second resistance is, but we can see that this zone would then be a potential major resistance zone for the euro if price were to reverse higher. Right, the first support has been identified by these two swing bounces here. We had a strong swing bounce here on the 6th of Jan, as well as multiple swing bounces here on 24th of Feb, 8th of March, and 15th March before price broke higher, right? So we can see that this is a very strong pullback support level, which is why we've identified 1.0515 as the first major support level for the euro. And we can also see that we've used a Fibonacci projection. We started this projection on the swing high here, 17th of July, going down to the swing low here. Let me be a bit more precise here, and ending with the swing high here. So we use the 78.6% Fibonacci projection. We can also see that this projection level lines up squarely with the 161 Fibonacci extension level. This extension level is found by using the retracement going from 6th July up to 17th July. So we have more than one Fibonacci level lining up together. So this is what we call a confluence of Fibonacci levels. Confluence just means you have more than one Fibonacci level at a particular price point. So in this case, we have the 161% Fibonacci extension level that lines up with the 78.6% Fibonacci projection level. So this confluence zone lines up pretty close to where the first support has been identified as well. So this is how we've identified the first support zone for the euro. All right, there's a question by Springfall as well. How do you draw the channel? All right, okay. So if I go to trading view, right, uh, right, do look up for the drawing tools for lines. Then look for channels. Right, we're going to be looking for channels. So then I'll click on parallel channel. Right, so I'm going to use this downtrend as an example now. So I'll start here. You can use the wick. So we start here. This is your first starting point, and then you draw down. So let's say price has been touching, making lower high, so I'll pull it all the way down like this. So this is my second point, so I'll end my second point here, click, and then I'll now extend the channel, right? I can extend the channel like this. I'll extend it here, so you can see it's trying to capture the uh, the the two lower lows here. So I'll do that, and that's how I draw uh, the channel. So in this case, this is a bearish channel, so I've already set up my templates, but you can manually change the color as well. So if this was a bullish channel, you would set this you change this to green, right? So if I were to do it for the uptrend, so I select this parallel lines icon. I want to do it for the uptrend here, so I start here. My starting point would be here on 15 March. You can see price bouncing off this level here, so I'll end this that ending point here, and then I'll pull it up here. Right, this is how you draw the channel or the bullish channel for the uptrend. All right, that's how we do it. All right, okay, I'll cover pound yen as well after this. All right, okay. I mean, we'll go down. We'll do the euro. There's a request for the pound dollar as well, so we'll do pound dollar. Then after that, we'll do pound yen as well. All right. Okay, so let me just get rid of these channels here. All right. Okay, so do take note. This is how we've identified the major support levels for the euro. Okay, going back down to where the second support is at 1.04, 1.040. You can see price making a significant swing bounce here on 15th of June, and then after that making a significant swing here on 21st of November as well as on 25th of November. So once again, price has reacted off this level multiple times, so that's how we've identified this level as a key second support. All right, so let's just zoom in a little bit on where price is currently trading. Right, okay, so just to recap on the euro, after breaking through a key overlap support last week, this level is now our first resistance level, which is 1.0693. We can see the euro ending Friday in the green, so we could see the dollar index pull back a little bit at the start of the week. That would mean the euro could rise higher first, and then of course with the FOMC meeting coming up, and if the statement and the press conference by Chairman Powell is hawkish, we could potentially see that demand for the dollar index pick up again, and that would cause the euro to drift lower towards 1.060, right? So do take note of the levels for the euro as well. Now let's quickly go on to pound. All right, so here we are on the chart for the pound dollar. Similarly, this first resistance here at 1.2418 was originally a major overlap support last week, where price broke through it on Thursday and Friday. So now this level is going to act as a major resistance for us. Why is this a major resistance level? Because we can see price making significant swing highs here on 13th of December, as well as on towards the end of January. And then when price broke above it, you could say it did find support of this level a few times before bouncing higher. And then this part's a bit choppy here, but you can see uh, several times where price has reacted off this level as a resistance and also as a support. So that's how we've identified the first resistance at 1.2418. Second, this is obviously second resistance. Let me adjust the labeling. Second resistance is at 1.2632. Why is that? Once again, we can see price making a significant swing high here on 9th of May, and then after price broke above it, making a significant swing bounce here on 3rd of July. Then we can argue as well as another two swing bounces here, 4th August, as well as on 11th August as well. So once again, multiple instances where price has reacted off this level, so that's how we've identified the second resistance at 1.2632. We also see a descending trend line for the pound dollar, right? Price has not been able to break out of this downtrend as well. So we could see the pound initially pull back towards this first resistance, maybe retrace higher towards the first resistance before resuming the downtrend in the second half of the week, especially with the FOMC meeting coming up. Oh, okay, gone again. All right. Okay. Mark, you're saying it's gone again. On my end this time, everything still looks okay. I'm not getting any error messages with regards to the connection and the stream as well. Does anyone else experience the same issues? Because this time round, I do not see any lag or on the streaming analytics. All right. I think okay. I'll just continue. Because on my end this time round, I don't see any issues with regards to the connection or the stream. All right. Okay. Anyways, I'll just continue. Right. Okay. So how did we identify the first support? We can also see we've used the Fibonacci projection. So we started this projection from this swing high here, going down to the swing low on 24th, 5th of August, and ending with the swing high here on 30th of August. So we use 3 points. Fibonacci projection always uses 3 points, 1, 2, and 3. And we can see that the 78.6% projection level and the 100% projection level line up very squarely with the overlap supports that has been identified. All right, thanks, Manaya. All right, so Mark, maybe could you just refresh your page? Maybe perhaps that's what could help improve the connection. All right, thanks, Ren. All right. All right, so we can also see not only we have strong overlap supports at 1.2293 and 1.2182, we can also see that the Fibonacci projection levels line up very squarely with these levels as well, further reinforcing the support levels for the pound. Okay, now there was also a request for pound yen, so let's take a look at that. All right, so here we are on the chart for the pound yen. Right, okay, so if we zoom out a little bit, okay, why we chose the second resistance at 188.26, I believe. 188, what is this? 188 dot 34. We can see pound yen has actually made what is this? 8-year high, right? Back on November of 2015 and September 2015. That's when price was actually trading around this level. So the last time price was trading around 188 was almost 8 years ago. So you can see price The pound yen has gained significantly against the pound has gained significantly versus the Japanese yen, especially in 2023, and is making 8-year highs. So do take note, this is a very key overlap resistance level for the pound yen. So that's how we've identified the second resistance level, right? Just let me tidy things up. Delete this, and I'll set this as the second resistance. Label this as the second resistance. Right. Okay. First resistance, of course. Let's just zoom in a little bit now. First resistance is the swing high that took place, right? I'm just zooming it down so we're a bit clearer. So first resistance is the swing high that took place on 16th of August as well as 22nd of August. And then you could say that pound yen has been trading or ranging between 183.24 and 186.42, right? It still seems to be respecting this major overlap support here, which we identified last week as well. We did say pound yen was ranging between this level and most likely continue to do so. It did break below the first major support last week. It did close below it. Now, is this going to trigger a move uh, lower? Uh, we've got two central bank meetings related to this pair, right? We've got the Bank of England and the Bank of Japan coming up. So, with the Bank of England coming up first, and we see them, they are forecasted to. What is Bank of England? Okay, here we go. So, Bank of England is forecasted to raise interest rates from 5.25 to 5.5%. Right, so when this takes place on September 21st, this could potentially act as a bullish catalyst for the pound yen. So we may see pound yen perhaps consolidate around where this first support has currently been identified before we could see it move higher on Thursday. Right, so do take note. One thing is price has closed below this level, so this may potentially uh, act as a confirmation for more towards a bearish continuation towards maybe 183 initially for the initial part of the week. But we do have the Bank of England coming up, and if they do raise interest rates and their statement is hawkish, we may see the pound yen reverse its downward uh, movement, right? So initially, because price is broken below this first support level, this could trigger further continuation in the initial part of the week. And then on Thursday, we may see the Bank of England reverse the move and potentially drive pound yen higher. Right. Second support has been identified as this significant swing bounce here on the 7th of August. All right. Okay. Then let's look at Swiss franc as well, because we have the Swiss National Bank coming up uh, on Thursday after the ECB, right? After the Federal Reserve. So Federal Reserve first on Wednesday, 20th September. Then we have 21st September, the Swiss National Bank. So definitely the Swiss franc is going to be impacted, and with demand for the US dollar being very strong over the last 8 weeks, 9 weeks, we can see Swiss franc breaking above what was a major resistance level, right? So last week, 11th of September, price was consolidating around 89 cents, and then finally it broke higher, right? Or it bounced off this level, sorry, to move higher, right? So especially with the Federal Reserve meeting coming up, it's quite likely we could see dollar franc initially move higher first, and then when we have the Swiss National Bank making its announcement, we could then potentially see uh, a bit of reversal or consolidation in the dollar franc. So we have two major central bank events that are going to impact dollar dollar franc this week. Okay, so the first major resistance level is at 89.88. We've identified this as an intermediate resistance level. You can see price making significant swing highs here back in April and early May. And when price broke above it, you can see price making significant swing bounces here on 22nd of May as well as on 8th of June. And then once again, price being restricted under this level. So this is how we've identified 89.88 as the first intermediate resistance. Uh, for this pair. And if we do a Fibonacci retracement level here, did a Fibonacci retracement starting from this swing high 31st of May going down to 27th of July. You can see that the 78.6% Fibonacci retracement level lines up, is quite close to where this overlap resistance has been identified. So we do have a relatively strong resistance zone for the Swiss franc between 89.88 uh, and 90 exactly, right? Now, first resistance has been identified at this major pullback resistance here at 91. And of course, the second resistance has been identified by this overlap level here at 92.90, which also is reinforced by the 127% Fibonacci extension level. How did we find this extension level? Once again, we did the Fibonacci retracement starting from this swing high 31st of May down to this swing low on 27th of July. We used the extension level at 127%, which lines up quite close to where the second resistance, overlap resistance is. We also have another Fibonacci extension level at 161%. This extension level is identified by using the retracement from 30th of June and ending with the swing low on 18th of July. So we have another Fibonacci confluence at this level, which indicates that this is a very significant resistance zone for Swiss franc. Now, to the downside, of course, this overlap support at 89.05 is where the first major overlap support has been identified. The second support, we can see it's a little bit far from where it is, but we don't see any other major levels. I guess you could also argue that we see a pretty decent pullback level here. I'm just going to set this as green for now. Right, we can argue that you can see price running into resistance here on early August, and then after once it broke above it, it found support towards the end of August before going higher. So 87.79 could be identified as a potential support area as well. But of course, these two levels here are pretty far from where price is currently trading. So do take note, the first major support for dollar franc is at 89.05. Right, then of course we have the Bank of Japan coming up on Friday, with the with the Bank of Japan maintaining its ultra dovish monetary policy stance. We could see dollar yen break higher initially through the first resistance, especially with FOMC meeting coming up on Wednesday, and then perhaps towards the end of the week, or rather on the last trading day of the week on Friday, especially if there are tweaks to the yield curve control uh, by the Bank of Japan, we may see strength for the Japanese yen increase. So that means we could see a potential pullback on dollar yen on the last trading day of this week. So do take note, the upside for the bias for dollar yen is to the upside for most parts of this week, especially with the FOMC meeting. And then on Friday, with the Bank of Japan uh, releasing their monetary policy statement and the press conference, if Governor Ueda announces further tweaks to the yield curve control policy that could potentially increase demand for the Japanese yen, that would mean dollar yen could pull back on the last day of the trading week. All right. Okay. So first resistance has been identified by using this Fibonacci projection levels here. How do we use this? So we started the projection from this swing low here, 16th of Jan, going up to the swing high here on 29th of June, and ending with the swing low here on 13th of July. So we can see the 61.8% Fibonacci retracement projection level lines up pretty close to where this overlap level is, resistance is. And let's just take a look at the 78.6 as well. Where does that lie? Okay, 78.6 projection is here, which is a pretty high for now, which is a bit far from where price is currently trading, so we won't use that. We'll just use 61.8% Fibonacci projection level. We can see it lines up well with this recent pullback resistance level here at 147.96. And if you were to zoom out, of course, when last year, 20th October, with dollar yen making a very high, this was, oh yeah, this was I think like a 10-year high if I'm not mistaken, right? When when dollar yen made this hitting 152. This was like, I think, literally 10. Let's take a look. I think we look on the monthly chart. The last time price hit 152, I think you'd have to go. Oh wow, yeah, it's like a 30-year high. Sorry, apologies. Yeah, the last time price was trading around 152 on the dollar yen was back in May of 1990. So you can see this is a 30-year high that price made back in September of last year, or rather October of last year. So this was the 30-year high in the dollar yen that shows you the how much the Japanese yen has been devalued, and you can see price is currently back to the 150 levels, and we could potentially see it break above 148 this week, especially with the press conference coming up by Chairman Jerome Powell. All right, okay. Now on the downside, the support side, we see a nice overlap level at 146.56. So that's how we've identified this level as an intermediate support. The first major support for dollar yen is at 144.75. You see price making a significant swing high here back in end of June, 30th of June, early July. Then of course, price finding support here. You could argue three times, once on 18 August, then on 25th of August, and then once for the third time on 4th September before bouncing higher. Right. So you can see that this is a very key overlap level as well. So that's how we've identified it as the first support at 144.75. Second support is this overlap level here at 141.63. Once again, you see price making a very significant swing high here on 21st of July and making a pretty significant swing bounce here on the 9th of August as well. Alright, so this is dollar yen, and if you guys are familiar with Elliott wave theory as well, we can see price is continuing on its wave 5, right? Wave 5 pushing towards where the 61.8% Fibonacci projection level lies as well. So although this does prove to be this does seem to signal a very key resistance area. However, we could see dollar yen break above it, especially if uh, Chairman Powell, the statement by the FOMC is very hawkish, and especially if Chairman Powell is once again hawkish during his press conference. So do take note of that. Right, okay, then I think we'll just conclude with gold and oil. Uh, if there's no further requests, all right, we'll conclude with gold and oil. So gold has been pretty bearish as well. Of course, with the dollar index rising over the last 9 weeks, we know gold prices and the value of the US dollar have a negative correlation. So what that means, if its dollar is going up, gold prices are down, and if dollar is falling, gold prices are up. So as we can see, with the dollar index rising strongly over the last 9 weeks, gold prices have been trending lower. It's making lower highs, lower lows. But we did see that gold have a pretty strong bounce on Friday as the dollar was sold off a little bit. So we could expect gold prices to continue higher, but we do see a very strong resistance zone for gold at 1944. Right, let's just zoom in a bit in this bearish channel. Not only is it trading within this bearish channel, we also see a very nice strong overlap resistance here at 1944.27. This level here also lines up with the 61.8% Fibonacci retracement level, right? If you do the retracement from this swing high 20th of July going down to the swing low on 18th July, we look at where the 61.8% retracement level lies. It lies very well with very close to where the overlap resistance at 1944 is. It also lines up very well with the intersection of the overlap resistance and the upper uh, bound of the bearish channel as well. So we do see very strong resistance for gold prices here, but that's it. We could see gold prices push higher for the initial part of the week, and of course with FOMC coming up midweek, we could see demand for the US dollar pick up again, and that could cause gold prices to at least stall around this level potentially, and then reverse to drop lower. Right, second resistance has been identified at 1981. Why is that? We can see price making significant swing bounces here on 25th of April, then running into resistance here in May and early June after price broke under, and of course making another significant swing high here in July as well, right? So once again, multiple instances where price has reacted off this level. So that's how we've identified 1981 as the second overlap resistance. Right, now going down to support, we can see the first major support is at 1889. We can also see a very nice significant swing bounce here that took place on 21st of August. We also see price making a slight small pullback here on the 9th of Feb. And we can also argue that price found support above this level on 28th of June as well. So once again, multiple instances where price has bounced off this level at 1889. So that's how we've identified it as the first major overlap support. We also have a Fibonacci expansion, right? So how did we find this negative 27% Fibonacci expansion level? We did it by using this Fibonacci retracement. So let's just zoom in a little bit. So we started this retracement here from this swing high here on 1st September going down to 14th September. To use expansion levels, do take note, price must retrace up to 50%. So let's see where the 50% is right here. So when we see price pull back up as high as 50% here, right, the 50% Fibonacci retracement, that's when the expansion levels come into play. The key expansion levels are negative 27% and negative 61%. So once price makes this retracement up to 50%, and should it then continue to fall, that's where the negative 27% and negative 61% expansion levels could offer significant support, right? So that's what I would like to highlight here. If you were to look at where the negative 61, let's just take a quick look and see where it lies. Does it line up with any nice overlap level? No, it's just somewhere in the middle of it's at 1872, sort of like no man's land. But should price break below the first support here in the future, perhaps the negative 61.8% expansion level could offer some support, although there's no major overlap level around that area. All right, okay, second support for gold is identified by this pullback level here that took place on 6th of March, which is at 1859. And we also see it line up very squarely with the 78.6% Fibonacci retracement level. So let me just zoom out a little bit. So we found this retracement level by using this going from this swing low here on 28th of Feb and ending with the swing high here on 4th of May. So the 78.6% Fibonacci retracement level lines up very well with the pullback here. So that's how we've identified this second support for gold prices. So let's just label it accordingly. Right, okay, so this is what we have for gold. So potentially we could see gold prices move higher first in the first half of the week, where it could run into resistance once more as it did on 1st of September. And then with FOMC coming up, you could see prices being stalling around this area before reversing to drop lower. All right, we'll just end off with crude prices. Right, okay, once again, combination of uh, tighter production supply, as we've all heard the news over the last week or so. Russia and Saudi Arabia continue to extend their production cuts until the end of the year. So what this means is they're controlling the supply, they're lowering the supply. So when you have uh, demand remaining relatively stable or demand increasing while supply is being cut, this provides lift to crude prices. That's what we've seen since 24th of August, and as well as since 29th of June as well. So the combination of increased demand in the US with inventory levels falling in the US quite steadily. I would say out of the 4 out of the last 5 weeks, inventory levels in the US have fallen. So that signals demand for crude prices. And at the same time, you have Saudi Arabia and Russia extending their production cuts until the end of the year. These are all factors contributing to bullish catalysts for crude prices. And we see that in WTI oil breaking above $90 for the first time since November of last year, right? So we see very strong bullish action for crude prices with WTI oil. and the first resistance for crude prices is at 92.23. So $92.23 per barrel is where we see a major resistance for WTI oil, especially with prices making this two significant swing highs here on 7th of October as well as in 8th of November last year. And not only that, we also have the 78.6% Fibonacci projection level as well. This projection level was found by using the projection tool. So we started from this swing low, 28th of June, going up to the swing high on 9th of August, ending with the swing low here on 23rd of August. We have used the 78.6 projection level, which lies about, what is it? Yeah, about $1 below where this major pullback level is, or multi-swing high, right? This is a multi-swing high here. So we have identified a pretty strong resistance zone for crude prices, but that's it. If we continue to see uh, supply concerns remaining in the market, and we also see demand increasing in the US and also from China, that could potentially, we may see WTI oil break above $92 per barrel. And for second resistance is this major pullback level that took place on the 30th of August 2022. You can see once again price making another significant swing high here. So that's how we've identified the second resistance. Now to the downside, we can see at 83.45 a very strong pullback support level as well. Price making a significant swing high here back in 13th of April, then of course as recently as 9th August as well. So you can see two major swing highs here. So that's how we've identified the first support level for crude prices. Second support level is at 77.48. We see a nice overlap level here as well. Once again, price running into resistance in mid-July, and of course bouncing off this level very strongly on 24th of August as well. All right. Right. Okay. So right. Okay. So I've just come to the end of today's session. All right. Thank you, everyone. All right. Thanks, Rhino. Uh, Jamilu, Banaya, Signal, Mark as well, Dolores, Raul, great. Thanks everyone for tuning in. I'll just quickly round up with the key levels for the dollar index, just to take note of that. Which is the best platform? All right, there's a question by Aman Rajan, best platform. Well, I mean, if you want to use charting tools, of course you can use TradingView like what I'm doing here. That's great to use TradingView. Otherwise, if you're trading, IC Markets, of course, is a very good, it's an excellent broker and has a good platform as well for trading, right? Okay, so we'll just end up with the dollar index. We'll recap the major levels on the dollar index, right? As we can see, very strong bullish trend for the dollar index. We may see price, as a week starts, we may see price pull back a little bit, perhaps down towards 105 first. And of course, we have FOMC meeting coming up. Potential driver for the dollar index to continue its uptrend towards the first resistance, right? So do take note of that. And yeah, we'll just end off with the summary for this week. Remember, we have four major central banks coming up. FOMC meeting, Federal Reserve on the 20th of September, Swiss National Bank on 21st of September, Thursday, followed by Bank of England, and then of course Bank of Japan on 22nd of September, Friday, right? Federal Reserve is expected to keep interest rates on hold at 5.5%, but that doesn't mean that Federal Chairman Jerome Powell can't be hawkish during his press conference, which could effectively push dollar index higher. Then, of course, Swiss National Bank is forecasted to raise their interest rates from 1.5% to 1.75% as inflation projections have been raised. So this could potentially, we could see the dollar, Swiss franc, sorry, push higher first, right? Because we have FOMC coming up first. So we may see the US dollar, Swiss franc push higher first initially. And then on Thursday, when SNB releases its statement, we could see uh, the dollar franc potentially consolidate or pull back. And then we have the Bank of England as well. So with regards to the pound, you could see the pound dollar falling initially, and then after their statement release, we could see some support for the pound, and of course we have the Bank of Japan on Friday. Do take note, they are definitely going to keep their interest rate at negative 0.1%, but any changes to their yield curve control policy would mean uh, a significant demand for the Japanese yen. So that means currencies like the dollar yen could potentially pull back on Friday. All right. And we'll just end off with the ending disclaimer. Okay, do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. All right, thanks everyone for tuning in to today's webinar. Do take note, we've got the live analysis session coming up later today at 9:30 a.m. GMT time. This this would be conducted either by my colleague or by myself later on today. So do take note of that webinar coming up at 9:30 a.m. GMT, as well as any other. Do look out for all the other webinars by IC Market for this week as well. All right. Thank you everyone for tuning in today. Hope this has been a great session and have a great trading week. Thanks everyone.